Welcome back. Good to be here with you all again. I'm Nadine from AusBiz. The next company that we'll be speaking with is Epnt Global. Now, it is a world leader in reducing energy consumption and carbon emissions for businesses that operate in the built environment. Over the past 25 years, the company has pioneered and refined the technology that allows it to extract, analyze, and report data to reduce building energy use. So that not only saves money, but it also helps the environment in the process. Since it was founded in Australia back in 1993, the Epnt team has expanded to 18 countries in Asia, Europe, the Middle East, and North America. So up presenting next from Epnt Global is Trent Knox, who is CEO. And also we have Richard Pillinger, who is the CFO of the company. Trent and Richard, over to you.
Thank you so much, Nadine, and thank you for all that are sitting in today. So we certainly appreciate the opportunity and excited to highlight how Epnt delivers operational efficiencies and significant energy savings in all forms of commercial real estate. We are a private company and have completed some external funding rounds and have a number of key investors in Perennial and the likes of Soul Patts. We are focused on growth and most excited about the space where we are in and the pipeline that we hold. So our business provides energy efficiency technology for all commercial real estate. So Epnt has developed a proprietary technology solution, and we call this the Edge platform. The algorithmic analysis and machine learning behind the platform incorporates 20 plus years of Epnt's building energy data. Our technology takes data from multiple information sources, analyzes it, and then detects real-time energy inefficiencies in buildings. Approximately 5.6 billion points of data are processed by us every year. The identification of faults and inefficiencies is highly accurate, enabling us to collaborate with the asset's internal stakeholders to optimize building plant operating systems. So our carbon emissions and energy savings track record is proven, with a total portfolio average of 22% per annum energy savings on base year, and north of 110 million in financial benefit to our clients over the past 5 years. NABERS and GRESB are Australian and international ratings and benchmarking bodies. We are equipped to audit, communicate, and report to these bodies on behalf of our clients. We take great pride in the fact that several of our clients have won the prestigious Dow Jones Sustainability Index Award. We work with blue chip client base, both domestic and internationally. Our technology is installed in 18 countries at over 280 commercial assets. The average contract tenure is 5.3 years across our total client base, and for our top 10 clients, the average is 9.3 years. We deal with all forms of commercial real estate, including but not limited to office buildings, retail centres, leisure facilities, hotels, hospitals, and industrial precincts. With high electricity costs, targets to reduce carbon emissions, the Paris Accord, and the associated requirements to environmental, social, and governance, our business's capabilities positions us favourably in the macro environment.
So Epnt has recently transitioned to a SaaS customer engagement model. So under this model, we invoice the majority of our customers on a monthly basis under multi-year fixed fee recurring contracts. As a result of this, we're seeing increasing recurring revenues and growth in annualized contract values. So annualized contract value represents the total annualized monthly fee run rate of all contracts that we have on hand at any time. So over the year ended 30 June 2020, our ACV grew by 23% to $7.65 million. Our unbilled contract value has increased to $23.4 million. So this represents future amounts to be invoiced to our customers under contracts that we have on hand. So this is future revenue and future cash for the business. On average, across our contracts on hand, there's a remaining term of 3.1 years. And as a result of the transition to SaaS, 82% of our FY20 revenues are recurring in nature. That's an increase from 45% in the prior year.
So it's a little known fact that buildings use 36% of the world's energy and emit 28% of the world's carbon emissions. The numbers and percentages are significant and gaining more attention daily as noise around global net zero targets become louder. Our ability to deal with and assist in both areas makes us particularly relevant.
Just putting this into context at an individual building level is that energy costs typically represent around 30% of the annual operating costs of a building.
So one significant key to meeting energy reduction requirements is reducing energy usage in the built environment. As noted below on this slide, the likes of New York, London, and Canada, regulators have enacted legislation that specifically targets real estate with aggressive near-term emission reduction requirements. Thankfully, we have a proven track record of reducing energy consumption in buildings on an average of 22% annually. It's also been interesting here in Australia. We're seeing sustainability targets being determined and articulated by a number of our key clients. So how do we deliver? Our technology platform is Edge, an end-to-end modular solution. So I'll just take you through this screen from the left-hand side, if I may. So we are constantly capturing multiple data sources internally and externally. These may come in the form of building management system data, weather data, temperature sensors, meters, occupancy data, or consumption history. From there, the data is continuously gathered and analysed by the Edge platform, offering real-time scrutiny on energy and water wastage, along with the likes of equipment faults, reducing waste resulting in lower emissions, tracking and reporting on tenancy energy consumption, improving comfort conditions, health and well-being, and even advising on demand management solutions. So as a result of our data collection and analysis, we offer solutions to enhance the performance optimization of our customers' assets. These outputs are managed and measured and may come in the form of management reporting, alerts, faults, curated action items, performance reviews, or via our in-house engineers who are constantly reviewing opportunities and working with teams to ensure positive outcomes. We drive savings to our clients through collaboration. We solve.
And what makes Edge so powerful is its adaptability. So each of the steps that we're looking at above can be tailored to meet the specific requirements of a customer or a building. So this means that Edge can monitor buildings ranging from a basic low-rise office block through to state-of-the-art skyscrapers and the largest shopping malls. As a result of this, our addressable market extends to all forms of commercial real estate.
So as the data is collected, it's sent to the cloud via our memory module. We refer to it internally as the blue box. The Edge blue box is the proprietary central aggregation device situated at the base of the building to cleanse and process all data sources up to the cloud. So what you're looking at here is a diagram showing as a typical building and examples of data points that EP&T would traditionally monitor. So we've collected and aggregated the data. Now we get to highlight it. We provide, through our monitoring and reporting service, or MARS, real-time accurate analysis through dashboards and other reporting functionalities. So what we're looking at here is a portfolio performance summary. Outside of the overall energy usage, the client is looking at four main areas. So the MARS summary, which is showing savings that have been and savings that are to come, consumption data, weather data, and a leaderboard. But if I can take your eye back to the bottom left of the screen, so what this is showing is there has been 822 items that have been articulated by our team and in turn closed by the site team. This has led to over $2 million or circa $2 million in savings. 60 remain open that when actioned will deliver a further $150,000 in financial results. Buildings are dynamic and need to be treated accordingly. So here's another very interesting example and one that graphically represents very simply what we can do. So Edge algorithms identified the building heating equipment was running 24/7 at higher than expected levels given the ambient conditions. The building management system or the control was incorrectly showing the equipment running as planned from 7 in the morning to 7 in the evening. However, this was due to a BMS fault. So the action, once we identified it, the engineer reset the BMS software and the operation returned to normal, which is highlighted in the middle of the graph. So you can see the blue running at a normal cycle, 12 hours, and the orange went before we had identified the problem running non-stop. The outcome was fantastic. The client saved $54,000 per year and it impacted positively on tenant conditions. So everything that we report on can also be seen in an app, Android or Apple, and this is, we call it the building in your pocket.
So Epnt's client base is truly international. Our system is installed in over 280 sites across 18 countries. All of these sites are serviced by offices in Sydney, Hong Kong, London, or Dubai. So we're truly scalable across the globe. Here in Australia, we have 153 sites across the nation. Europe is our fastest growing market. We have 54 sites in the UK, 19 sites across continental Europe. And we're seeing a huge amount of interest out of Europe in terms of ESG and sustainability goals. The UAE has grown from 0 sites in 2018 to 43 sites today. And excitingly, in recent times, we've made our first inroads into the North American market. So we've signed up 2 new hotel clients in New York, including the Hyatt in Times Square.
So our international blue chip client base operates in key target industry verticals. So commercial, industrial property, hotel and leisure, retail, health and public sector. I can also very happy to report we're also starting to talk to schools, which is really exciting. I'd like to point out a couple of clients you may recognize. So Goodman on the top left, here we provide energy billing solutions, but based on continuing a wonderful relationship with Goodman, they now have asked us to get involved, which we are doing in gas monitoring at one of their significant sites in the Sydney market. British Land, they've been with us since 2010, and we collaborate with them on 16 of their assets. Kingsmead on the top right hand of the screen is very interesting. So they're a predominantly industrial portfolio. They came to us, they had a leak. It was identified for the fact that it was having a $5,000 bill circa, and then the next month it was $14,000. So they appreciated pretty quickly there was an issue. We got involved with our technology. We were able to identify the leaks for them. They got them fixed. And based on the performance, we are now looking and working with them on 14 sites. Stockland, been with us for a number of years. We work across 18 of their retail sites, and we are now looking at working with them in some of their other portfolio assets. Finally, the last one that's an interesting one is New South Wales government that I'd like to point out. So we work with Property New South Wales, and we're doing gas monitoring across a lot of their regional markets, Wagga, Dubbo, etc. And this was something that they didn't know how it was to be achieved. They came to us, we came up with a solution, and we're off and running, and we're continuing to grow with Property New South Wales.
So our client base is diversified both in terms of the asset types that we service and also by geography. So this is down to the adaptability of the edge system, which means that we can operate anywhere in the world across any type of building. So what this gives us the advantage is that for a portfolio owner, a client who may have assets spread across different countries or different verticals, they can come to us. We're a one-stop shop solution for them, as we've proven our track record across all these areas. Just in terms of how we're spread, so in terms of building use, commercial is our largest segment, 49%, with retail and other and hotels making up the balance. In terms of regions, Europe, as mentioned, our fastest growing market. It's now become our largest market by ACV, having overtaken Australia and the Middle East. So the key to understanding the success of Epnt is down to our energy savings. So what we're looking at here on the right is a graph which shows for every single site that we have, the annualized energy savings across those. So you'll see on average, we're at 22%. For some sites, that's 40, even 50%. So these are huge savings, and this is being delivered year on year by us. We're also note that 81% of sites also achieve over 10% energy reductions. So we've proven that we can deliver across any type of building. The financial benefits for our customers are huge. Over the past 5 years, we've delivered savings of over $110 million to our customers. And from an environmental and sustainability point of view, this equates to over 100,000 tons of CO2 emissions avoided each year, which is the equivalent to taking over 22,000 cars off the road. Energy savings also contribute to sustainability ratings of buildings such as neighbours. And again, we've got a proven track record of helping our customers increase their neighbours ratings and other sustainability ratings by up to 2.5 stars, with an average increase of 0.8 stars across the portfolio.
So these results really do differentiate us from our competitors, none of whom have the track record of the energy savings, the improved sustainability targets, and the longevity with the blue chip clients.
So here is that longevity. This is showing across all of our portfolio the contract terms or the relationship terms we've had with our customers. So on average, 5.3 years, and for the top 10 clients, 9.3 years. So clients sign up with us, they renew time and time again. So these are long-term relationships that we develop due to our results. But it's not all long-term. You'll see here over 40% of the sites that we currently service have been added over the past 2 years, which demonstrates our ability to grow. And adding these sites with the recurring revenue base really is just adding to the lifetime value that these clients bring to us as a company.
So EP&T standards facilitate accurate reporting to the leading Australian and international energy efficiency and sustainability ratings and benchmarking bodies. Now, Richard talked a second ago about energy savings, but what we are seeing more and more is this whole new push with sustainability. It's some strong tailwinds in this area. So in addition to delivering the operating savings, we can help create significant value for the asset itself. So green building certifications positively impact property valuations. They make the sale or lease process easier. They support higher rentals, improve occupancy rates, and strengthen tenant retention. And I just would like to point out, NABERS is the Australian body that the commercial folks work under or work with. And what has happened here is, like, even in the last year or so, if you do not have a 4.5-star NABERS rating, a government cannot come in and tenant that asset. So it just is really showing how important these rating agencies become to the asset owners. So another aspect of the business, which is really neat, is the fact that so many of our clients have won some significant awards over time. And you can see these all below, but I'd like to point out, we're talking clients like Stockland, Westfield, British Land, Derwent London, etc. So these are significant, and we're very proud to be able to partner with customers of this nature. So yeah, we do work with a lot of the big guys, the British Lands, the Goodmans, Link Reese, etc. So it's really lovely to be able to share some of our some other case studies from some really significant clients. So Stockland's an interesting one. We've talked about them, but 2,802 energy efficiency improvements have been implemented in the time we've spent with them, coming up to 12.7 million in cumulative savings. Westfield London, 36% reduction in electricity. M&G, £3.4 million in cumulative energy savings. It's exciting stuff. So just context to this slide, Derwent London is our investment portfolio worth £5.4 billion and is the largest London-rated central focused REIT. So they put out to the broader community a responsibility report, and this in this particular case, in their 2019 responsibility report, we were listed as one of their service providers, and very thankfully had a whole page on what we have done for them. So basically, we've worked on a number of sites to include the 5 sites here you see. But what they reported was simply that they had saved 20 million kilowatts against their baseline, and their performance in 2019 alone provided a savings of 4 million kilowatts against baseline since the installation of EP&T.
Which equates to 21.8% annual savings, which is in line with what we do across the rest of the portfolio. So our engagement model has been changed radically over the past 12 to 18 months. We moved away from a high upfront capital model to a SaaS-based customer engagement model. And accompanying that, we've implemented a strategy of a land and expand approach for our portfolio clients. So what SaaS is doing is it's taking our discussions away from CapEx, from really high value, high upfront sales, and we're having much simpler sales discussions with our customers. So it's a flat monthly fee, it's very transparent pricing, it's very clear to them what they're getting. So these are discussions we're now in operating discussion. And from a land and expand approach, we have a modular approach. So therefore we can be talking to a client purely about water monitoring, for example, or purely about gas. What that enables us to do is get a foothold in those portfolios, show what we can do, and then we can start talking to them about adding services to those. So we can add water, we can add electricity on top of the initial service for that site, as well as talking to them about other sites. So this has had huge traction very, very quickly for us in terms of growing the revenue base, the number of sites that we have, and allowing us to penetrate through portfolios much quicker, particularly here in Australia.
So the business has achieved considerable success to date. That said, investment in sales and marketing has been non-existent, and as a result, limited brand awareness. In addition, the previous heavy CapEx model, which Richard just spoke about, has made rapid growth far more difficult. With a new management team and a focus, we've identified the below levers to ensure success. So sales and marketing. We are currently investing in sales, marketing, advertising, and brand awareness, and are seeing results through sales pipeline and customer engagement. Some initiatives include, in the last 2 months, a new website, new brand identity, consistent content updates, thought leadership, and a formalized SEO process. Sales and marketing will be a key area of focus moving forward. Client engagement. In transitioning to the SaaS engagement model, as Richard pointed out in 2019, we've witnessed a stronger sales pipeline, expedience in sales delivery, and turnaround and overall customer engagement has been terrific. Product development innovation. So we've listened to our customers and we accelerated our work on the user interface and software capabilities. Our business is very scalable. We're investing in driving automation and efficiencies in product development and the deployment processes thereof. International expansion. So we will expand internationally where we see the greatest potential and when we really do clearly understand the market dynamics. And finally, M&A and channels to market. So we look to develop strategic partnerships to open new channels to market through referral and resale arrangements. In the UK already, we're talking to the likes of Deloitte and other sustainability partners that can help us move to the next level and make the introductions that we would so like to receive. We see M&A as an opportunity to accelerate entry to new markets, build market share, and increase product offerings. So with regards to growth, I think this is just really important because these recent wins have all happened since June of 2020. So these have all happened in this sort of the last 6 months or so. And we've talked about the strong sales pipeline growth, particularly because of SaaS, but just this whole sense of now being able to educate people on who we are, the new Epnt, is super exciting. So you may be familiar with a lot of these brands, but I'd like to point you just to a couple. So ESR, predominantly industrial. They do have some commercial assets. We started very small with ESR in New South Wales. We had a site, and now we're in 8 sites, which has all happened in the last 3-4 months. And we are offering a lot of different services to them. HSBC, first HSBC site we had was in London, and we commissioned it in 2020. And based on the success we had with HSBC in London, we've been given the opportunity to look after this amazing asset in Dubai.
So our key operating metrics, this brings everything together, and this is, for Trent and myself and the management team, I guess this is where we look to see, what's been the impact of all these changes that we've put in terms of SaaS, in terms of starting to invest in sales and marketing. We're really pleased that all of our key metrics are moving in the right direction. So annualized contract value up to 7.6 million. We've had, over the past 3 years, average growth rates of 24%. The unbilled contract value increased to 23.4 million. That's 27% annualized growth over the past 3 years. The lifetime value of all of our contracts, so this is taking into account expected renewal rates. We have a very low churn rate of around 7.4%. So currently with our contracts, we calculate the lifetime value to be $75.7 million. And as we're continually adding more and more sites under the SaaS model, that lifetime value just continues to grow and exponentially increase. The average remaining term on the contracts that we have on hand is also increasing from 2.7 years up to 3, currently 3.1 years. This is a result of talking to our customers. We now, when we're up for renewals, we now talk to them about 3-year renewals, whereas previously it was only 1 year. So these are small changes that the management teams recently implemented, but they're all really starting to have a positive impact on the future of the business. Total contract value. So this is a reflection, I guess, of the sales effort, the effectiveness of the sales team in these years. This is the value of the combined contracts they sign in those years. So 6.2 million in 2018, 7.5 million in 19. That increased to $10.9 million in FY20. So we're seeing significant growth, significant interest increasing due to our model and our effectiveness. And finally, the transition to the SaaS model. It's a difficult transition for the company to go through, but now our revenue is made up of 82% of recurring fees as a result of this.
So, we are so very thankful to have the opportunity to chat with you all today, and thank you, Nadine, for hosting this. I would just like to share, before we get into some business highlights, I just think that I'd like to let you know, I've been in the business for about 9 months now, and I cannot believe what an amazing business it is. It has got a huge amount of potential, and we are just working in some very, very relevant space at the moment. So working with Richard as CFO, we've got an amazing management team and some super people that are employed, and we very much look forward to continuing to save people money and look after the environment at the same time. So on that note, I just want to leave you with a couple of key highlights. We have a globally proven technology. We're successfully operating in 18 countries. We deliver proven energy savings and drive sustainability, and this has been demonstrated through the 22% per annum energy savings on a base year as a portfolio average, over 110 million in the financial benefit over the last 5 years, and the avoidance of over 100,000 tonnes of CO2 emissions annually. Our solution is currently installed in 280 plus assets with leading global real estate brands. Our global addressable market is immense. Epnt has grown its annual contract value by 23%. Investment is underway in sales and marketing, and our SaaS-based contract model will continue to accelerate ACV and recurring revenue growth. So thank you so much. Over to you, Nadine.
Yeah, great, guys. Thank you, Trent and Richard. Listen, the questions have been coming in throughout that presentation, so I will just start and move my way through them. So the question being, what is the time frame between winning a signed contract and the customer actually going live?
Let you take that one, Richard.
Yeah, so there's a number of factors in there depending on the size or the complexity of the building. So with some of our recent examples, so Kingsmead that we touched on earlier, that was a very quick process that went from essentially an initial inquiry through to a signed contract through to being us operating within around 3 weeks. So that's that was a great example of how quickly we can move. For some of the larger, more complex buildings, it can be a 3-month process. It really depends on how much infrastructure is in there, what may need to be put in, where they're located. But we, as an internal KPI on these larger projects, we aim for 3 months.
Okay, let's get to it. We've got another question here. Are your customers the property owners or the facility managers? What is the revenue concentration within your top 3 customers as well?
So we have a mix. So we have customers who are the property owners, and we also have customers who are the facilities managers. So again, it depends on the situation with the customer. So it's probably across the portfolio, we'd probably be around 60% with owners, 40% with facilities managers. And then in terms of concentration, so top 10 is around 25%. So top 3 is around 15% of our ACV.
And if I could kind of maybe expand on that just a little bit. So, the goal here, as we see it, having done, sort of looking at the market as a whole and what is happening in the market, we did have a founder-based business, very fantastic foundational product, but was sort of a bit of a one-size. It was all we sold was a very, very big, elaborate process or solution. And now, thankfully, we've really been able to go out and talk to our clients and really understand. A lot of them just are looking for very simple things, like I say, water monitoring, gas monitoring. And these things can happen quite quickly. And also it gives us this, I want 1,000 assets, and 280 assets is wonderful, but the larger the market and the more we're involved across different verticals, the more opportunity we have to sort of that whole cross-sell, upsell capabilities.
How much does EP&T spend per year on R&D? And what is the current spend targeted at?
So on average, over the past 10 years, we've spent between 1.2 and 1.5 million per year on R&D. So all of our R&D is expense as incurred. We don't capitalize those costs, and it's really a mixture of improving existing functionality, but very much looking at new functionality. So what's happening? What are our customers looking for? What are they asking for? How is technology evolving within those buildings that are there? So what? How do we stay ahead of the game essentially? So there's a real blend, and we try and balance up how the team spends their time in terms of looking at what they're doing in terms of these new opportunities, as well as improving the core product. I mean, it's the fundamental core product that we have, which is around the energy analytics and efficiency, it has been the driver for this business, and that's critical, and it's, as you can see by the numbers, absolutely proven in terms of what it can do. So we obviously have that fundamental base there, and then we can start building around the edges of that in terms of how we can therefore improve our offerings to our customers.
Yeah, and I think also it'd be worth noting that the product, the foundational product itself is 20 some years, huge amount of data sitting in the back end. We have had competitors come, of course competitors will, but there are some that are very, very, have potentially very good dashboards, or they do different things. But for the fact that we can go so deep and so granular, what we're finding now is these big assets are really needing that data to be able to make business decisions. So, to work on the surface is, it can look good and sexy, but, to really do the job that we can do, we can get deep, and that's really important.
This dovetails nicely off that answer. Do you guarantee energy savings that can be achieved by the customer using your products? Have you ever had to compensate customers for any shortfalls, perhaps, on that front? So
we do, on occasion, we offer guarantees, yes. So we have different scales of that. Under the SaaS model, our approach, where obviously this is where commercially sensible, and we have a very strict internal management protocol around how and what we will offer a guarantee on. Under SaaS, we typically would guarantee a saving equating to our fee. So the customer at worst will be net zero cost, and obviously we given the 22% average savings, we tend to overachieve, so therefore that's cash positive for them. Under the old model, we may have guaranteed higher amounts, but in the history of EP&T and having to do this, we have not had to compensate anybody for failing to meet a guarantee. So we stand behind our numbers, we stand behind our ability to deliver by offering guarantees where sensible, and it's been proven over many years and many customers that we can do that.
One last question. I'll have to get you to keep the answer a little bit quick, but back to EPT. One of our viewers is saying, how many sites could EPT install? That is, what is the installation capacity? And is this carried out by EPT or by contractors? Is this a limit potentially to growth?
So the install is done by contractors that we work with around the globe. So that makes us very scalable, because we can ramp up contractors and run them down as required. And And so I don't know, Richard, maybe you
No,
can better, I mean, it's
yeah.
sort of, it's a great question, but no, we've never had to say no to anybody. I can promise you that.
No, as Trent says, we have third-party installers, so they can go on the ground, they can do what they need to do. But vitally for us, commissioning, testing, setting up the system can all be done remotely. And that's either, mainly done here, but we have teams around the world that can do it remotely as well. So no, it's not a limiting factor because we don't have to go to all of these sites to do the work. We can, once we get the data, we're in, we set it up here.
Well, listen, guys, great presentation. Trent Knox, CEO, Richard Pillinger, CFO of Epnt Global. Thank you, and thanks for watching. We'll be back shortly.
Thank you so much.
Thank you, everyone.